tweets out personally. So there's actually some really good stuff on PIMCO this week, directly from Bill Gross. First of all, everybody knows there's QE3 out, and one of the things that Bill Gross came out with about that is the Fed to buy mortgages until the cows come home, think 7% unemployment, 2.5% inflation targets, buy real assets, gold, and a house, which is interesting.
Wait. Buy real assets, gold,
a house. Well, giving examples of real
So he's
assets.
not buying bonds.
Right, which is interesting since he runs the largest bond fund in the world.
Okay.
Yeah.
Why do you think he's saying that?
I think he thinks inflation, and it's actually good that you bring that up, because one of his next tweets is, to own a Treasury inflation-protected security, you need to believe in 2.5% inflation or more in future years. He says, I do. We are in the age of inflation.
We're in the age of inflation.
Yes. So he definitely is going back to his 2010-2011 stance, which people are also starting to question a bit since he got burned so bad last time.
What happened last time?
His fund was trailing the index and the average category pretty dramatically, which is a big exception to the rule for his fund, but it was so bad that he actually felt compelled to apologize to his shareholders or to his investors.
Well, he hasn't been doing a lot of apologizing lately. His returns have been fabulous. Actually, the PIMCO Total Return Bond Fund this year, 8.52% return.
Wow.
Okay, this month, 1.86%. And that's a lot better than its peers. The way they track bond markets is this big index, which basically has all the large bonds in it. And the Barclays Aggregate Bond Index on year was up 4.96%, and this month 1.13%. So he's outperforming by over 0.5% this month, and by over 3.5% this year. Okay. So he's just killing it.
That's great. And we put out some actually pieces on that you wrote. Can you tell us a little bit about those?
Sure. Well, I wrote what he's doing with the funds and how he's changing it. As you mentioned, he's not too bullish on treasuries. Well, what is he bullish on? He has all this money, he has to put it somewhere, and he has to invest in bonds. So which bonds is he actually putting in them? And this will come as a surprise to a lot of people, but it's munis, municipal bonds.
Really?
Yeah, and you know who is not bullish on munis.
Yeah, Buffett actually sold off one of his CDS positions on that, although there is some debate as to whether he was actually making a call on the muni market or not, since he actually does own some munis as well.
Bottom line, people perceive what Buffett did as very anti-muni, very bearish for munis. Well, here Bill Gross comes in, and with his bond ETF, puts 10% of his bond ETF into munis.
That's a large amount.
That's a large amount, but what's actually more interesting is he owns all sorts of different secured bonds in that ETF. Most of them are very short maturities, 2, 3, 4-year maturities. Well, with the municipal bonds, he's going out 10 years.
Wow. So what does that mean for investors in the fund?
Well, what that means for investors in the fund is essentially that if interest rates in munis moved, it would have a really big effect on the fund compared to other portions of the portfolio. Essentially, 1% interest move in munis would have twice as much effect on the muni portion of the portfolio as it would with the rest of it.
So he's really twice as bullish as his position would show.
Exactly.
Wow, that's impressive. And what about treasuries? How does he feel about those?
Well, the data we have is a little old. The data we have is out of August 31st, but in July, as of the end of July, he had about a third of the PIMCO Total Return Fund in treasuries. Well, a month later, that's down to 22%. So basically, he sold off a third of his treasury position. Now, think about that in terms of billions of dollars. Let's say the fund is about $260 billion. Well, a third of that is close to $100 million.
Wow. So that's actually interesting here too.
I'm sorry, just a small correction.
Sure.
A third, he had $100 million. Now it's down to about 600 billion.
Yeah.
Now it's at 60 billion. That's the
whole
whole thing.
Thinking those big numbers. Great. So, and that actually, this wasn't actually this week, but I think 2 or 3 weeks ago, PIMCO actually came out, or Gross did via their Twitter feed, said the bottom
some ways he's betting that the difference in yields between treasuries and munis is going to get smaller. So even if treasury rates go down, but the spread between the two becomes smaller, he could still do well.
Yeah, and I actually found it interesting. One of the things that I didn't think about also from Twitter is that a lot of people are concerned about this muni tax exemption going away. And he made the point that if that happens, then existing muni bonds are likely to rally even further, since they're unlikely to not be grandfathered in. So their prices will rally even further because they're going to maintain their tax benefit, while new munis would not, which I thought was an interesting perspective.
In other words, they'll become more scarce.
That's right. Yeah, the ones that maintain the tax exemption. That's right.
Grandfather gets us.
Yeah, that's right. So, I think that's a good overview of everything from this week.
Probably too much.
Probably too much, and we'll be editing